Hello, YouTube, and welcome back. Today we're going to be going over this dividend portfolio. As usual, need to remind everybody that this is not financial advice, but I'm just showing what a dividend portfolio can look like. Kind of exciting. Today is Monday, February 9th, and so far this month in February, we've brought in $203 in dividends, bringing our total for the year so far to $560. Last year, we ended up with $1,548 by the end of the year. So we're not even halfway through February, and we've brought in $203, which is pretty awesome. On this chart, it's just a quick and dirty kind of showing all the dividends that have come in. We got a $19 dividend, $9 dividend, $10.30. Our big one is the $103 dividend, which is a little curious that it's down from 106 and down from 104. But I will look at why that is in a different one. But basically, you have some different market jitters going on with different sell offs and stuff, but I'm just going to sit pretty in the dividends. This chart down here is just showing um, the dividends that are coming in per month. So the one on the right here, this is the total dividends for each month, and I started all this back in April of last year. So we're coming up on the first year of this and already halfway, not even halfway through February, and I've brought in more dividends than was in September of last year. So we're going to close in on 300 or $400 a month real quick. And the nice thing about these dividends coming in is I don't have to worry as much about the ups and downs of the market because some of these are really stable and they're just automatically buying back into the funds that they come from. So that's that. And I'm really targeting, I want to get to $4,000 in dividends in this calendar year. And I think I'm going to exceed that. So we're going to watch this chart on the left go up really quick. And I just want to show people if you start putting on automatic buys and focus on these dividend income amounts, what can happen. I'm not going to update all of this chart, but I do have two new dividends to show you. I'm going to turn off the screen real quick and then pull up Yahoo. What do I use? Yahoo Finance. Um, Hopefully this will come into view. So, good news. I picked two new dividends to add to the portfolio. As I've said, I've been looking at different things to add to keep the diversification up and keep the yields up. So the first one that I added is called CLM, and we're going to look at that. So CLM over here, Cornerstone Strategic Investment Fund is what CLM is. And I'm going to show you the return and everything. But um, the dividend for CLM, this says is 17.99%. Um, I'm not sure what's up with like the expense ratio and everything, but this is the chart. Let's look at the 4 year. It's been pretty flat the past few years with a 17%. So I'm just going to put in for our yield, our annual yield is 17%. And let me look here. The other new one that I added is called XPay. And I don't have very much of this, to be honest. I just have one share, but um, I may be adding into this as well. I didn't feel as confident about XPay, um, but CLM looked really good to me. XPay is, does it say? Yeah, the yield on XPay, it says 21%. I felt as though XPay was going to have more NAV erosion, but who knows? Maybe it could be even more stable. Either way, another 20% payer. I'm not going to update all these yields right now in this video, but or the weightings, but these are the two new ones: CLM at 17% yield and XPay at 21% yield. These are the two new ones that I'll be buying. Let me match the color here to this. And then I'm going to update the returns on all of these and this little return chart where I'm trying to cover kind of the trends in the returns so that we're not ignoring that. And the big one to watch out for is SPYT because it's a big part of the portfolio and it's probably the most risky position. So let's look at that one first. So with SPYT, I'm just watching to make sure I at least stay in the green on this one. So the dividend was and this is $103. So 103 here, and then I'm going to add all these up. Why is the sum gone? Well, this should be. Do I know how to do this? No. Sum of all these. Okay, 412. Oh, I see what I did. Okay, let's do it this way. Sorry about that. This should be the sum of all of these numbers. 412, and then the return, because this is checking against the NAV erosion. The current return for today is negative 160, so it's gone back up a little bit. So our final total, what we've brought in with SPYT, is $251. And we're just watching this because if this fund drops a lot, if it drops another 2%, then I'm back to like break even. But we're still in the green by $250 on SPYT, which is really good. So we have the yield for CLM and XPay, and now I'm just going to go through the returns. So I haven't held these for very long, but let me put this over here, and we're going to fill this out. So CLM, the return on CLM since I bought it is up 0.7%. And the return on XPay. And you know, the market has gone down a bit, especially like the NASDAQ. But that's okay because the dividends are rolling in, and that's what we're interested in. This is up 1.18% as of today. And again, I don't have much of these, but we're going to build up these positions again. They seem to be high dividend payers, and yeah, I got some good information on those, so they seem cool. Okay, go through the rest of these and see the returns. So this would be interesting to see what actually are the returns, despite the fact that some parts of the market have gone way down. ASGI. Is that right? When was my last video? Wow, this has just taken off. Since my last video, some of these have done incredible, and these are dividend payers. ASGI, as of today, is up 11.26% in my Robinhood portfolio. That's just awesome. Is this going to reflect that? No, I'm going to have to update this chart here, but let me know if there's other dividend stocks that I should look at or dividend funds. I'm liking the variety that I have so far and where this whole fund is going. Okay, so that's ASGI. I did buy some Amazon as well because Amazon took a dip, and so, like I said, dividends might be just one part of a healthy portfolio. Might not be good to have it as your entire portfolio. Anyways, CSWC since last time is also up 3.53%. And again, this is the total return of the fund. So some of these can go down a little bit, but the dividends are making up for the difference. See, go in order here. QQQI since last time. Let me clear these out. So I guess that's fine. QQQI since last time is up a little over 1%, so 1.78%, so that's back up. JEPQ is holding steady at 4.1%. GPIC is at down to 2% in the green, so this is its lowest point for a while. IWMI up 2.87%, so that's going back up. See, a lot of these aren't really made to make like really huge gains, but we just want to see some general trends. So SPYT is back up. It's still in the red, 2.5%, but we're in negative 2.5%. But that's good because we had negative 3% a couple times. So we want this to stay steady if possible. We did XPay. SPYI is up 6.4%. Wow, incredible. This is the highest we've seen it in so long. Up 6.4% for SPYI. Incredible. And it's paying 11% per year. JAAA. Now, the JAAA, JBBB, I'm not expecting to really move at all. So this is actually back in the negative, but basically this shouldn't move. So negative 0.06. No big deal. Paying 5.1%. Clause, again, basically shouldn't move. It's back down in the negative, but no big deal. This is negative 0.54%. SPHD may have had, so this has also been doing incredibly well. 6.49% since the last video in the green, so that's awesome. JBBB, this is one of the bigger negatives on this one, but really no big deal. It's paying 6.9% annual yield, and it's negative 1.02%. No big deal. JEPI is up. Where's JEPI? JEPI's back up. Oh, the highest we've seen it in a while. It's positive 4.35% in the portfolio, so that's great, trending up. We did CLM, SCHD. And again, you can do a dividend portfolio and not have to do all of this and really like I'm doing a little more than the bare minimum. SCHD has been doing on like a historical run, okay? It's up 15% in the portfolio, which is just crazy. I did not expect that whatsoever. It pays lower dividends, right? Only 3.7% annual yield, but um, since I bought it, I think at the beginning of this year, it's up 15%. And it's just crazy. Incredible. Okay, there's the Amazon. We're not counting that. Okay, so that's everything. Um, we checked SPYT is still in the green. Oh, these are the annual yields of the different funds. So we can kind of see we've got a few under 5%. Most of them are close to 10%. And then we have a couple that are closer to 20%. And the higher the percent, generally the riskier they should be. So we would expect CLM and XPay to be riskier, right, than a QQQI or a JEPI. Um, More risk of nav erosion, stuff like that. Then the last thing I'm going to do is I don't really know exactly how to update this, so I'm just delete that and let's grab these numbers again. I guess I have to put in zeros here because I don't know. This is just our first reading, so we'll grab all this. I think I have to grab this and then these. And then we go, I'm in Google Sheets, insert chart. Cool. I'd like to change the colors and stuff on this, but this kind of gives us another view of like, are there any trends I can identify? Um, So like CLM and XPay, I don't have much readings, right? But XPay's up 1.18%. But what is this? Oh, you can ignore that first one. But JEPQ down a little bit, but it's kind of holding steady. SPYI, big spike, which is fun to see. I don't know if that'll last. QQQI, still trending down, but it recovered from our last reading. JEPI is just in a general trend up, which I love to see that. I mean, it's had its lower readings, but it's overall, if we look at this, it is trending up, which is cool. And then our SCHD and SPHD have just done incredible this year. Like, I mean, I don't know what to say. Outlier year, I don't know that anybody really expected that. I think some people say that it means there's been market weakness. Those funds do better when the overall market is weaker because they're like safety hedges, but I don't know. And then we have JAAA, JBBB, and clause just holding right near zero. JBBB is a little weaker, but you can't time everything, so it's kind of just flat. These are cool. I mean, they're safe and they should just stay near zero. SPYT is our big risky one and not really falling off more. If it got down to what was the worst we saw? We had a negative 3.75%. But if this dropped to negative 4%, um, yeah, I'd be worried because at that point we're basically break even and we want to make money. We don't want to lose money, right? So at least it's holding steady. ASGI, I don't know why, but I mean that's had an incredible run. So some of these that were weaker last reading have recovered somewhat. Um, and this is the whole portfolio. I'll redo the weightings. XPay is barely going to show up because I don't have much of that, but the weight of the each fund has to be readjusted. I'll double check the yields for the next video, which should come at the end of the month. One other thing I found out as far as the dividends coming in is generally there's a bunch of dividends that will come in the first week of the month, and then there's a bunch that will come in at the end of the month, and the middle of the month is kind of a lull. Um, so, still hoping that we surpass last month of 357. I don't know if we'll hit 400 this month. Probably not, but maybe next month we'll hit 400 monthly, and this is just growing up and to the right, which is what we want to see. Um, we have goals. If there's any other dividend funds that I should check out and consider adding for diversification reasons, like I don't think I have a lot of real estate focused REITs or something, right? I don't know really how I feel about those. I know some people like them. Leave a comment if you have one I should look closely at and consider. The overall returns of everything I'm holding, I'm pretty happy with right now, um, and that's pretty nice. Have you started a dividend journey? I mean, I'm not. I'm still in my first year of this technically, but I have auto buys on, and one of the things I want to show people is that if you have auto purchases on and you stay invested, I think dividend income is something that is achievable, even if you start out small. Um, Let me know your thoughts in the comments. Thanks for being here.